Check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear, Coach Jay. Happy Friday. Happy Friday to the At the Buzzers as we end this week
The
on a
Friday,
pretty slow note.
said on a slow note, you said?
Yeah, on a slow note.
Oh, kind of what we've grown to expect. Shout out to Coach Ray in the chat. Uh, top fan in the chat right now, competing with Brad Sims and Ems and Andrew. Good to see everybody. Welcome to At the Buzzer, our market recap. If this is your first goal of this session is to review what happened in the markets for the day. We may review what happened in some markets that you have not traded before. But we believe our goal as traders is to identify opportunity and see how we could take advantage of those. You already know us by now. I'm Jay. That's Paul. And let's talk about some markets. Coach Paul, how was your Friday? How was your week?
Pretty slow. Really cut back on my trading this week. I had a decent week, but really, I didn't see much. I didn't trade much, so I'm moving some stuff. So
Got you.
I'm keeping my powder dry, so to speak. How about you?
I hear you. Today was a winning day in personal accounts, losing day in Top Step accounts. I think I got just a little too eager in my Top Step accounts, but then caught a pretty nice trade later on in the day, catching part of the long. So a decent week. Probably there's a ton that I could learn from this week. Ton of notes that I have improving my own trading. But let us know in the chat how your week ended up. End of the week, last Friday of July. Uh, let us know how you did in the chat. We will get into the markets. Andrew says, I figure about the time I get these slower markets figured out, the game will change again. Yep. Before we know it, it'll be September. Kids will go back to school. Volume will come back into the market. And volatility will pick up again. Last July, we saw a pretty big sell off after the Fed meeting, or was it a CPI? It was one of the two. I think it was actually a Fed rate cut. And we saw some pretty crazy volatility. Just why are we talking about that? Next week, we have a Fed rate decision. Right now, Fed's expectations are to keep rates exactly where they are. We hear the president wanting a 3 basis point cut. I don't think we're going to see that anytime soon. But he wants rates to come down. So let's see what happens. You know, there's been a ton of pressure on Powell to cut rates. So we will see if we get any volatility next week. Let's talk about the news real quick. Not much as far as planned news goes. We did have U.S. durable goods come in at negative 9.3%. Forecast was negative 10%. Outside of that, nothing really as far as planned news goes. Coach Paul, anything you have on the news?
No, everything came in within reasonable expectations. Market really didn't see anything else new. Lazy days of summer, and the market just naturally rises like a wispy cloud.
Did hear some, we did hear the T word kind of thrown around a little bit this morning. President Trump this morning saying there's a 50-50 chance of making a deal with the EU. I think we heard earlier this week that we were pretty close to a 15% tariff and a deal with the EU, but now we're hearing 50-50 chance. Kind of going with the theme that we've been hearing. There are tariffs, then there's a deal, the outline of a deal, but no pen to paper yet on many of these. With some of our bigger trading partners. Trump also said, I got the impression yesterday from Powell that he might be ready to lower rates. On Canada trade, there could just be a tariff, no negotiation. The president said a couple of times that Canada is difficult to work with, so it may just be a tariff. Get into the markets. At least we had a wider range. Yeah, Andrew. Yeah, right. Bigger range today. Good coach.
Yeah, bigger range, slow action, and as we talked yesterday, to be expected. There's no big events coming out in the near term. Even the tweets aren't making much of a reaction. I think the market's adjusted to that. And as expected, and I would expect it again this coming Monday.
To the downside, it's 35 different markets we can trade with Topstep accounts. To the downside, today we had crude oil. Pretty nice move in crude. Down 1.5%. Micro Bitcoin futures down 1.85%. And silver, our biggest percentage mover to the downside. I saw some traders talking about silver in the chat during the day. Down 2.2%. Micro Ethereum, honorable mention, as always, down 2.45%. But again, I don't know how many traders we have trading that. To the upside, we had the Ultra Bonds up 0.38%, the Dow up 0.39%, and cattle, our biggest percentage mover to the upside, up 0.5%. To round out our big four, we already talked about crude down 1.4948%. The S&P up 0.37%, gold down 1.06%, and the Nasdaq up 0.25% on the day. The S&P and the Nasdaq making new all-time highs, doing so kind of timidly, right? We're not seeing a blow off top. We're not seeing a huge rally coming into these markets. We are seeing, all-time highs being made with lower than average range days. And that's just kind of the environment that we're in. Is it summer trading? Is it the market waiting for something? Whatever it is, these markets are grinding higher, just doing so reluctantly. JD, I saw your comment. Heating oil had a nice day today as well. Let's take a look at the. We're at the end of the week. Let's take a look at the weekly in the Nasdaq, Coach Paul. What are we looking at?
Rocket higher. There is no resistance up here. I mean, that's a nice move. Like I said, buy the dips. One thing, a nice pattern here is we haven't broken a previous week's low in 1, 2, 3. This is in a month. So I'm watching that weekly low to see if that holds. I think if we close over that, we'll have some short-term correction. But right now, it's doing its job. And it's all-time highs, and there's no structure in there to say the top's in. That is not trading or investment advice, just the way I see it.
New high in the Nasdaq 23,476 even. Coach Ray says facilitating trade, right? This is what the markets are meant to do, and they can kind of grind up this way for as long as they want to. Really, we saw this June into July last year. We kind of just grinding up, made an all-time high. I think this was a CPI or Fed decision, and then we sold off. But markets are doing what they're meant to do. Let's take a look at the. Let's go straight to the 30-minute here. What are we seeing on this 30-minute, Coach Paul?
Well, where did we hold that white line?
What is that white line, chat? 200 moving average on the 30-minute chart. The opens, the New York session open have been very similar over the past couple of days. Last night didn't really give us much to talk about. We did make a new all-time high. Dakota in the overnight. Dakota did take a pretty nice long in slow markets. We sold off. We can see price went, volume didn't. But like you said, Coach Paul, we came back down to that 200 moving average on the New York session open. One thing I want to point out is, and we talked about this during the opening call, here's the first half an hour or to hour in a couple of these markets. A couple of these days in the Nasdaq, where that first half an hour to an hour was the buy to dip opportunity for 4 days in a row. And while there may be short opportunities in these markets, this is kind of to me just a sign of how short lived those shorts are. Here's an hour to the downside, and we rally from there. The day after that one, we had some news that brought us a dip, and then we rally. On the 22nd, we had the first half an hour selling off, and then we rallied through the rest of the day. The 23rd, we sell off for a half an hour, we rally for the rest of the day. Yesterday, a little longer, took an hour, rally for the rest of the day. Today, it happened pretty quick. It happened within that first hour. We can see had that dip into that 200 moving average, and we rally for the rest of the day. If that's not buy the dip, I don't know what is. That is 5 out of 5 days this week where we had some initial selling in a half hour or so. Found buyers, we grind higher. Go ahead, Coach Wall.
Well, like we just discussed, it's doing its job.
Yep.
The equity market is designed to go higher in its natural state. And it has different um, um, role than, say, gold or crude, which are used and traded all the time. And they really follow the laws of supply and demand. And sorry about that. So they rotate. Stocks, they really don't rotate well. When they go down, we either panic or you buy the dip. And it was interesting you brought that first half an hour. It was exactly that there's no liquidation. It's light volume and there's no fear. So this is the way stocks like to move, and it does it. Buy the dips, and we could break it down to the 3 or the 5 minute opening. Today, like I said, was the same thing. Let's see. In the trading pit, it used to be locals would push the market to see if they got any reaction, to get the paper to move with them or the public. You see early, there was selling, but the public's not, it hasn't panicked. And what's next to do? You got to cover. We talk about it a lot. That's bad sellers create really urgent buyers. So we held that opening range for the with VWAP, not price, and that's a tell to me. If VWAP leaves early, then they're selling and it's active selling. If it doesn't leave, what does that mean? Think about that.
What they were looking for. All of the volume was up here, price stopped, selling stopped. Or they met some passive buyers down here, which they've been doing for the past 2 months. Right? Every dip in this market has been bought in the last 2 months.
You know, it's an interesting point, Coach Jay. I don't follow the Dom, but I wonder if there was, just underlying buying there in the Dom.
I don't know that
I
I
don't know.
saw any bids sitting out there, but there had to have been, right? There had to have been something sitting out there, whether it was an iceberg and they weren't showing it, or they're just kind of refreshing the bid at a certain price. I'd have to look at the delta by price to see how it traded out, but you know, ran into a wall right here, and pretty early on, 6 minutes in, I mean, we know that the volume for that first candle is usually always going to be the highest of the day. 6 minutes in, we got the highest candle outside of that, and immediate reversal. Right, we closed above it, uh, and we've said it. There are opportunities in a market that's kind of reluctantly making these highs. You're going to find more shorts than normal. Right? You're going to get these bigger pullbacks. But if I'm framing short trades as, hey, this market's up way too much, it needs to fall apart, more days than not, you're not going to get that, and not for a very long time. We got a pretty nice one on day where we sold off about 200 points. But more often than not, again, it's a 40 to 50 point pullback in the Nasdaq, and then we continue to rally. And perfect example of that again today. And then once we got above this high volume, we rallied for the rest of the day. Pretty much it.
It's interesting, Coach. I do have on another charting service I use that measures delta now, volume delta for the day. I don't fully trust it, but I'm gaining confidence. Either way, at 9:30, and you talked about the first hour, went from a negative delta to a positive delta, right at 9:30. So what does that mean? And by the way, the delta imbalance was small. Well, I mean, it's the biggest imbalance was 1,700 contracts on the opening where we sold. So I think it's just there was some selling with no follow through.
None at all.
It appears to me that there's a good probability that those sellers, when they stop selling,
They market bias back up to all-time highs.
yeah, I've been in that crowd.
Yeah,
Like it's gonna go. Oh, it didn't. Well, I'll be
bias way
patient.
back up. I think what's interesting as well is the difference between the S&P and the Nasdaq. The S&P looks like, and I think where most traders look at the Nasdaq as the leader, it's the exact opposite right now. The S&P is the much stronger market, um, where it was making all-time highs, kind of grinding higher. Again, still a pretty tight range on the daily. Uh, but there's, to me, what looks like much more fluid price action in the S&P than we have in the Nasdaq right now. That's not always the case. Uh, and maybe part of that is Tesla keeps getting his ass kicked every other day. Uh, and it's a huge
I
weighting.
mean, it's a good point.
Yeah,
It's
it's like down 8% one day, then it's up 6, then it's down 10, and kind of all over the place. And it's a heavily weighted in the Nasdaq. Um, and that could be it, but GDL says the buying is relentless in ES. It is just consistent positive delta, market order buys coming in at highs. Uh, we see some sellers start to come in on the tape and they just don't get any traction at all. Um, for us trading this, can you find some opportunities to take short trades? You can, but it is a kind of a tough sell in these markets right now. Anything else you have on the equities, coach?
let's take a quick peek at my old friend. You know my friend well now,
The Rusty.
the Rusty. Um,
Take a look at the daily.
Daily looks
Holding
solid. Well, where we go back to
right to that
20-day
20.
moving average and held, and all that happened, like you said, in the first hour in the Russell, um, bounced right off that 20-day moving average. Um, got under the 200-day half hour, but like I said, there was no the selling stopped. And also that on Russell, there was at the same time 10:30, went from a negative delta. What that means is there was an imbalance of selling, an urgent selling. So hitting the bid or taking the offer, market orders. Um, at the same time as the other indices, so it turned around, turned into a positive delta, and rallied pretty steeply. Um, so when we talk some technicals and when we talk volume, we don't have it yet, so I don't talk about it too much. But the delta, volume delta, where you have an imbalance of buying and selling, is something helpful to watch, especially when you see structure like this: big selling followed by more selling. And that actually was no, it wasn't quite a J trade, was it?
Kind of. I mean, if you waited for this close, where again we don't have to preempt this trade, and we are looking at this in hindsight. But I do want to reiterate the importance of waiting for candle closes, if that's part of your strategy. There's a gold trade that we were talking about earlier in the chat, where it looked like it had the potential for a reversal. But remember that sometimes this volume could mean continuation, right? It could mean we're going to continue lower, and we don't know that until it happens. But yeah, once you get to this close above here, that could be your opportunity. Take the long and definitely get a 2 to 1. We're looking at this on a half an hour chart, and there's a part of me that says, don't maybe you don't need to look at anything lower than a half an hour chart. But
Yeah.
talk about that later.
It depends on your personality.
Yep.
You would the longer time frame you choose, the smaller position you should have because you're opening yourself to risk on a longer term time frame, and bigger things can happen. So can bigger rewards, but it has to fit your personality.
All right. Anything else on the equities? Do we want to go over to gold?
Oh, I want to go to gold.
Let's take a look at gold. What are we seeing on the daily here in gold?
Wow,
What goes
quiet.
up
Must come right back
must come
down.
right back down almost the exact same way. I mean, this is
Well,
such a great trading market right now.
what was our trend line?
Here,
I
we'll put
think
it
we're
back.
right back to it. We're sitting right on it, settled there, but there's going to September's coming. That one's going to be interesting. Um, but how many times we hit that trend line soon enough? This is why you just mentioned the word close on a candle or a bar, whatever you want to call it. A close means a lot more than a price. On these line charts, those where it and the line turns is it's marked at the close. You won't see anything outside of the close. It marks close to close. And if when we get this view, we're still not closing outside of this. We touched it, what was that, Tuesday? But immediately got rejected. So even if you thought that was going to be a breakout, I, it didn't close or the next. So we just keep. It's going to go here. That's why that 20 and 50. It's starting to, with all this time it's taken, especially with that blow off top. I'm feeling bearish, but I can't get full out bearish yet.
It's hard to in this market, because it's just been kind of following this pattern for almost 100 days. It's been 94 days hopping around in this range, and this range just getting tighter and tighter. So I hear you, Coach Paul. We've asked the question a couple times: Is the rally over? Is it finally going to break? And as soon as it looks like it's going to, what does it do? Finds
and
buyers, pops right back up.
And here, you know what's interesting is finds by I don't look at the volume and the average range. It's just getting smaller and smaller, so there's less interested players here. But what's happening that I'm seeing is that 20 and 50 are flattening. And it'd be if that 20 and or 50 close below the low of that uptrend line, I think we get I'm playing for momentum to the downside.
It says
Um,
check the monthly. Go ahead, Coach Paul.
go, oh, the monthly. Let's look at wow.
That's pretty crazy to look at. We still have couple of days left in this month, but I mean, if that's not a Dorito, I don't know what is.
Yeah, and it looks like a Cool Ranch Dorito.
Not a
Wow,
Dorito, I don't know what is.
you just said it. It was 90 days we've been in this range. Now looking at that, same thing. That trend line is important. Monthly, weekly, daily. Um, my feeling is that this market does get into a liquidation stage, it's going to be violent. I don't think it's not like it's going to be calm. Like what? Like oh wait, okay, I got some more for you to sell. It's going to be get me out.
Yeah,
Um,
and that's the thing too, right? Where there is still volume trading in this range, right? We see inside month after inside month after inside month, which is pretty insane. And it just looks like a spring ready to pop. Uh, what direction it goes in, with the equities rallying, if I had to bet, it'd be to the downside as well. But what does the next monthly candle look like coming into August and September, right? Is there even enough room in this wedge to we're at
We're
the tip
gonna
of the
find
wedge.
out. And
How's gonna crack?
it's funny, we say that there's some great trading opportunities in gold
100%.
lately. It just so let's look from last night. London, let's mark Asia open, Europe open next, but looks at Asia open
Here's
once again.
here's Globex. Do we even really wanna look at Globex anymore?
Yeah, yeah, you know what? It's good practice.
It's good practice, you're right. Here's Globex, here's Asia. We had initially with Globex, we looked up above, we can see volume did not leave. What happens when the Shanghai exchange opens? Volume comes in, said, "Let's go." We are selling everything. Um, and
I got some gold.
yeah, uh, really beautiful sell here. I do want to mark out some levels. Hogue talked about a naked point of control. He was looking at a TPO point of control. For me, I was kind of looking at this 30-minute candle from last week. This was jobless claims and retail sales. And we can see why am I framing out that candle? It's because it's one of the highest volume candles we had for last week. There were some obviously higher than it, but this one was unchecked. We had not tested this before. The long that I took during lunchbox trading with Dakota and Gabe, based on this demand zone down here, kind of testing into this level, Hogue was looking for 33.24s as a target to the downside. We didn't get exactly there. We saw a reversal pattern take a long. Did I expect this to go 50 points to the upside? No, there wasn't enough time. But this initial trade here from that open last night, Asia open last night, that was just that's what we trade for. Who full ported that short? Matthew? Man, I wish I did.
It's interesting looking at from our previous discussion on the weekly, the monthly, the daily. We're starting to see liquidation out of Asia, who was Asia was initiating this buying for the last year, 2 years, and they're not. They're you hit it on the head. Shanghai opened and they sold gold. Europe didn't want it. New York didn't want it, and we had that little bounce at the end. But
This is just
I
this is
call that
I have to close my position bounce.
yeah, that's it. End of day.
Yeah, it's like, damn it, I have to get out. Fine.
Yeah. No, yeah, you do as a prop.
Right. As a
That
prop,
said, also,
if you don't have the overnight margin, you got to close. I mean, but if you caught most of this short, your account might. You didn't have the margin, you might have got the margin, uh, holding on to a short here.
let's let's frame out the London close or
Uh,
London Open.
London Open
London's
is
calling.
right here. Yeah, every session, like this is that what you call, passing the deck. Sell some more.
That's to me that is in the framework of liquidation. That's exactly what it is. Let's see what happened in the New York Open.
So let's go down to a 1 minute opening range for that. I think the house, if I can remember correctly, did take a short because the 1 minute opening range did trigger a short. And we were looking for a pretty big sell off. I think ultimately this trade came back and stopped us out, um, which happens, right? Let's see a couple things here because we took the short. The JD and Hogue are looking for that 1 minute opening range breakout. I think we got short somewhere around 33.4270. I don't remember exactly where JD put the stop, but it was somewhere up here, where unfortunately we just got stopped out, kind of on this wick up here. Um, I want to see something, Coach Paul, because we talk about, and this is on a 1 minute. So what I'm looking at right now is that ATR stop, and
Mhm.
it would have been much
Yeah.
tighter, right? The ATR on a 1 minute was at it was at 1.1, so the stop would have been right on the other side of the opening range. So no, would not have saved this trade at all. We would have needed pretty big stop, but
Well,
market.
just
Go ahead.
just reviewing what we just talked about, it started with Beijing and London agreed, and so did New York at first, right? But now we're low. We're about a daily average daily range lower when New
Yep.
York opened up. I
Yeah,
mean, how much lower was it at that point?
about 1% on that open.
Yeah,
About 1%. And we asked that question as well, right? Like, how much lower can this actually go, without a little bit of a pull up, right? And that's kind of to be expected. We did see what ended up being a decent reversal pattern here. Shout out to Brad, who was in the chat saying, "Hey, we have a potential J trade here," where we got short 33.4270. Um, and initially it didn't look like one, right? We traded up, and this was a choppy start to the day in gold. I remember the house account was in profit, out of profit, in profit, out of profit. VWAP was pretty much a flat line from that opening range. It did flatten out a little bit. Um, this was kind of messy. If we look at the equity open, where we see some volume coming in just a little bit again. Uh, that's where we see it start to flatten out, but there wasn't a lot of decisions being made here. And unfortunately, we just get stopped out. It happens. I think it's a trade that we could potentially get back into, but that's neither here nor there. That's if it's a different trade at that point, right? It's not an opening range breakout trade at that point. Hmm. And just some really nice continuation. Another big volume candle here. This had the potential to be a reversal. That was the low of the day at the time. What did we not get? No close above. Continuation. Hold this low. I did take this one to the long side. That was the low of the day in that demand area that we were talking about before. Turned out to be a decent trade,
yeah.
even after settlement.
No, it was almost a triple bottom on that or a W bottom.
Yep.
Um, but the last time was that the after the close, the Globex close
Oh, Globex close was right
at 1:30 Eastern.
here, which still a pretty nice move afterwards.
Yeah, more
That's the
short
settlement
covering.
right there. Yeah, play pretty nice trade. Bought those 100
All
point
right.
longs this morning in the Nasdaq. Sidian, did you catch them? Let us know. Uh, Gold has been coach rates. Man, everybody's been saying that. I hope it continues to be this for us. Paul H just said you've been trading gold strictly for 4 weeks. I know Coach Ray is a gold trader and looks at those initial balance breakouts. Hoag's been saying it. Coach Paul, you've been saying it. Uh, Gold is the best trading market we have right now, uh, in my opinion. It's
Yeah.
providing ranges. There's a decent enough range to take advantage of. It trends on most days, even if on a daily it's still in a tight range. There's a trend trade somewhere in that daily range. I think it's the best market that we have.
Yeah.
Uh,
Time to move out. We-
it's gonna get crowded in here soon.
yeah.
Maybe
But
go ahead.
great. Unlike the crude.
Yeah, let's go to the worst trading market right that provided a pretty decent trade today. But what are we seeing at crude on the daily? Let's look at the weekly here.
Looks kind of like the daily.
What are we
What
seeing
about the
here?
monthly?
Monthly?
Yeah. Kind of like the last, all of them. Wow. We thought we had a chance to get out of that range. How many times?
More than I could count.
Yeah. And we're just seeing that. So this is a balanced market. If we look even farther back in the monthly, these are still kind of big. I mean, we're in complete balance here. It's not cheap. It's not expensive. It's just right. Um, and limited opportunities. Limited. There are our opportunities. So let's go back and see what happened today, starting last night.
And then after this, I want to answer a question from VP who says managing gold is difficult, needs a big stop loss. What is the ideal stop loss for gold in points? Good question. If you're saying managing it is difficult point wise, we'll take a look at the ATR. If dollar wise you're saying that, trade micros. Uh, because gold is can be an expensive contract for, especially for how much is moving. We're still seeing 50-point range days, $50 range days in gold. That can be expensive. So trade micros, but we'll look at the points in a minute. Let's take a look at the half hour in crude oil. Last night, decent long here potentially.
Yeah. Um, it took off and whoa, but that's the Asia session. We've been saying who rules the roost in crude.
London. So let's take a look at the London Open and completely different story. That's when that volume starts to come in. Again, the volume is coming in an hour before it normally does. I don't know what happened here. But just look at it, right? Like did the clocks change? Something happened where that volume is coming in an hour earlier than normal. Uh
Well, it did, and look at it completely. I mean, like we said, crude is not a big market in Asia. It doesn't really, unless there's some emergency. It's London to New York. For whatever reason, that's what that's where the volume comes in and the move begins. Boy, that was well defined. Um, and it was funny. Look at that hammer candle on the top on the opening. And this is an hour earlier, you're saying? Oh, I can't hear you.
you should be able to hear me now. This is an
Yeah.
hour early. I don't know.
Hmm.
Hold on one second. Let's do some investigating here.
Oh, Paul H., what time is it?
That's 2:03 Eastern time. And look at that spike of volume. And it happened the same way yesterday too.
Oh, that's true because it is a little early.
Really, but it's not right at the top of the hour, right? Where it looks like an open. I don't know. Maybe we're
Oh,
zooming
we
in too
know this.
much, but
Hey, it came. There was good big volume,
yeah, it's huge.
and it was buying.
One got liquidated.
I, that almost looks like the gold top on a much smaller basis.
Yeah, it does.
That that's a blow off top. That was the high of the night. Is that the high of the day? I think so.
Yeah, high of the day. Yep, it
And that's
was.
all. And that was what, four times the average volume for that time period. Pay attention when you see that.
Yeah,
That's a train wreck for if you're a buyer.
yeah, and I
I'm
mean,
going to tell
look,
you this: even if you're not looking to sell and you see something like that, and we talk about make sure the close. Well, immediately after that candle that made the high on all that, think of all those buyers, all the King's buyers and all the King's men who couldn't move that market forward, right? And it starts creeping. If you've ever traded long enough, you feel it when if you're long, you're like,
thing
you
cannot move higher.
right?
It cannot
Every
go.
tick. If you could literally, it's like, oh, they hate me. Quit selling it. You get annoyed, whatever, if you've been in this. Now, for really, there's traders who can trade on feel. I'm not one of them. But I know I've known traders who just can sense it and just go, I want nothing to do with this. Um, but that's a pattern we've been seeing. Let's keep an eye on that pattern because that sticks out like a middle finger right there. If you were a buyer, like, oh man, and setting the high of the day.
Yep.
Interesting.
Alan Barber says, I'm really enjoying these recaps. I don't trade crude, but it feels like I'm getting a great education. Alan, we look for these patterns in pretty much any market because the DNA is the same. Now, what we try to cover is how to execute, how to be in the right mental state to see this and execute and trust it in real time. But this setup can apply pretty much anywhere. And what we're looking at is high volume at what ended up being the high of the day. We don't try to make an assumption that that's the high of the day, but once we start to close below it and that volume starts to leave that range, that's telling us that there's not enough convinced buying up here. Thanks for joining. Let's take a look at the opening range trade. 4 days in a row, this trade did not present an opportunity. Uh, Hogan JD call it a low probability trade for a reason. Um, Coach Ray was actually in his class yesterday sharing some edgeful stats on the probabilities of this opening range break, and they're low. So if you're looking to never lose a trade, the opening range breakout trade is probably not one that you're going to want to take all the time because you're going to lose a lot, right? We lost 80% of the trades this week in the opening range crude oil trade. But this one trade and then letting it play out, every once in a while, you're going to get an opening range that is the dead ass high or low of the day. Crude gave us a 1.5% move to the downside after that trade. That probably covers every loss that we took for close to 2 weeks on that trade if you really let it play out. So, not always going to work. I think accepting that it's wrong, and you hear JD, JD was going through it all week. He's like, this market effing sucks. I hate it. Why are we taking this trade? But every loss cost a certain amount, and that's predefined, right? I'm only going to risk a little bit more than the opening range. 5 micros, you're risking $100, maybe $150. Does it suck to lose that much? It does. But, you know, if you're not tied to a win rate and anyone who's selling you on, hey, you need to win all the time, win, 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 that's the only thing that matters, not true. See traders have a huge win rate and then lose one trade and blow everything because they've attached themselves to winning the trade, right? They've attached themselves to seeing green, Coach Paul, instead of uh, you know, longevity.
Coaching, trading is a game of probability. It's rooted in the fact that the only certainty you have as a trader is uncertainty. There's, I'm going to say that again. The only certainty you have is uncertainty. So when you're in an uncertain environment, you can't expect to be right all the time or make money on every trade because then it becomes a probability. And accepting your trading process and testing it that it has an edge. Coach Jay just discussed you not only can you will get into a situation where he was describing JD as this sucks.
Yeah. Yep.
It's like being a fan of the Cubs or the Knicks. You have to hang in there because sooner or later, and well, maybe that's a bad example because miracles do happen, but
Knicks look all right now. Couple of
yes,
tweaks away from a final.
and in like a good baseball, a hitter in baseball, right, has an edge, makes contact. They look at these stats. It's the same thing in trading. You're playing your edge, and as long as I've been around, you're going to have those streaks. Streaks run in both winning and losing. But if it has an edge over time and you're confident in your process, then you can stop looking at wins and losses. And it takes time, it takes experience. It's not natural. When you can just, okay, I took the right size risk, not and I and I took good losses, and now there's 8 in a row. It's not natural to go, "Oh, this is great." That part I'm gonna tell you, it's not natural. But when you accept it and you know it's part of the game, instead of becoming a panic, it becomes an annoyance, and then it becomes neutral. Because on the other side, you can't go skipping down the street like you figured out markets when you win 8 in a row.
You still have to follow the process at the end of the day, right? It could be And I think the biggest part of watching Hogue and JD execute these trades is letting them work out when they do, right? I like what JD has started doing is on this trade when he gets a 1-to-1, he's managing part of the position, right, and paying for the trade, making it a risk free trade, right? He'll go short 5 micros when the position gets to 1-to-1, he's going to scale out of 2. Right now, we're talking about now we're not talking position entry and exit. We're talking position management. Right now, I have a trade that is favorable. I know that it has the potential to be the trend for the rest of the day, but if I could take the risk off of it, I will. Right, pay myself a little bit for the trade. Scales out about half or a little less than half at a 1-to-1, pulls the stop in a little bit so the trade won't cost anything at that point. From there, you have to let it play out. And if you don't, then it kind of skews those numbers, right? It's like, hey, I'm winning 20%, but I'm still negative. Well, if you let your stop get hit every time, right, for a 1-to-1, but you're taking profits at a half to one just because it feels good to see green on the screen. Um, it might feel good in the moment, but over the long period of time, you got holes in your bucket and they're leaking. Uh, right? Where it's like you have to let it play out. So says to all you coaches and folks here, this will be my third time streamlining and cutting the speculative and part risky BS from my trading plan. I'll tell you what, bin number one. Yeah, I mean, the more you can eliminate the randomness in your decision making, randomness in results is going to happen, right? I don't know. Anytime I could take a high probability trade, it could say, hey, my playbook says this is 90% of the time. The result of that one given trade is random. There is no way to tell whether or not this is going to be in the 90% that do play out or the 10% that don't. No way for you to tell that. But you just put the risk behind it. If you can eliminate the speculative, risky randomness from your decision making, that's a different story, right? How many trades do we take? And I remind myself of this all the time as well. How many trades do you take where when we do this analysis at the end of the day, we're talking about setups that we can repeat every day. How many of my trades don't fit any of this and there's just some random bullshit? You're still doing that, then like you said, there's probably something that you need to eliminate from your covered all the markets, Coach Paul. We're having a good conversation here. There are a couple
Yeah.
of questions in the chat from Freeper Trading and Claude. I see your question as well. Um, please tell what is an okay size to go live. I have my 5th payout ready to request, yet I feel like account size is not big enough to go live.
Great question. Without knowing, you've had your 5th payout. Wow. Congratulations. Without knowing, just hearing your 5th payout, and I don't know what time frame. Is this all the same account?
Yeah, I
But
think with it being eligible for live, because the path to live is 5 payouts from the same account. So it had to be at least a month and a week, at least 5 weeks.
at least, all right. That's keep the same size right now. That's my initial reaction without knowing deeper your process. Stay in at that comfort zone. And then from here, if you want to trade bigger size, keep more money in your account. Build up the account. You've seen Coach Dakota do that when he built up his account. Because when you're doing that, you can start taking more size, and you think of it moving on a 45-degree. Don't do it where it just shoots up by a percentage of doubling your size. It'll affect your trading, and it'll affect your account in the process, that you cannot control whether that next series of trades is going to be profitable or unprofitable, right? Most likely, from my experiences, when you're getting to payouts and you're moving up into a funded, you've been on a good streak, right? Think most likely.
Yep.
Do not change your size. Because we see a lot of people, they get there and either they trade bigger or they freeze. I would suggest doing it comfortable, because you got there at this size trading at most likely a process. It doesn't seem like it was a random process. So, and one another thing is, you want to be comfortable. You absolutely, I can't say this enough. You have to be comfortable over time. If you start going up in account size, especially you're putting pressure, you're in funded now, right? And now you got more sides and you're not used to the swings, you're putting an awful lot on the plate. Um, so stay cool. Stay with what brought you there, and then reevaluate after, if you're like 2 months into it, and you had now, let's say you have some chips on the table. Well, maybe you can consider, but you can't. I would do this. Once you do that, do not take any money out. See if it builds, and then take out some after that, because you're going to have to make a commitment to go to the next level. Hope I didn't confuse anyone on that.
Reaper says thank you, Coach Paul. So great answer there. Great stuff. We got one more question from Claude. Do I use Bookmap or other tools to confirm entries on gold? Nope. Everything you kind of see me use here, I will use Quantower, and you guys have seen me use Quantower before, where I do a little bit of volume analysis stuff. But that entry that I took on gold this morning or this afternoon, whenever that was just based on sometimes the simpler the better. So that one was just, hey, we're out of demand. We're here, but do I look at the DOM for most of the markets that I trade? Yes. Am I looking for where absorption volume happened? Yes. We did get some at these lows here, but really everything that I do, you could do with what you see here on TopstepX. Uh, Mohammed in the comments saying Combine XFA then live, each stage has its own different goal. You need to adjust your plan and trade management accordingly using the same risk. I'm learning this the hard way.
Uh, Thank you,
Yeah.
Mohammed. Yeah, like I said, it's real. Like Mohammed, as he says, the hard way. So what we bring you here, and I have to throw this out, we that at Top Step, like Coach Mohammed, he understands it. No, it's not like, oh, this is easy. Just follow the rule, and you'll be on the road to golden times. And these are great discussions. So once again, I'm going to go back to this. Con- Don't take, stay at the same size. Maybe not even cut it, but be comfortable. An old trader told me once, there's a difference between trading for a living and living to trade. Big difference. And because now if you feel you have to make money this week, ugh, yeah, that's a tough road.
You said something pretty important here, I think, as well, where it Hogue says it all the time. Stay centered in your decision making. Mo says we know and we understand, but we lose awareness during trades sometimes, and that's a real thing, right? I'm conscious of that as well. Sometimes I'm just not mentally locked into what I'm doing, and I think when I realize that is when I need to avoid making any decisions. Um, we talked about eliminating the hey, I just clicked the button for the fuck of it. Excuse my language. We talked about eliminating that because we've all done it. When you're not mentally locked in, that's probably the best time to just say, hey, you know what? Yes, is there an opportunity for me to make money here? Yes, but this is probably a higher probability time of me just clicking the button and accepting that this result is going to be random, but I don't have to accept that. I could just cut myself off at this point. If you're, Mo, you say you if you lose awareness, that happens to me too, Mo. And I think when it does, every time I cut myself off at that point and just go do something else, it's always a better result. Anytime I try to just fight through it and be like, yeah, I'm not locked in, I'm distracted, I'm like watching a YouTube video and on my phone, texting and doing whatever, and it's like, "Oh, yeah, I guess I could just put on a trade, whatever," and just click something, uh, those results are completely random. So, you know, doing what you can to step away in that moment, I think is important.
Great discussion, by the way. I think, especially, yeah, I like this on Fridays. So
Yeah,
when you go over the weekend, we understand almost like a tribe that we're people that are going through this or have gone through it and understand. Um, like we said, we're here reviewing. We don't say what way you should trade. We give ways we see it. We have other coaches have the way they see it. The end of the day is you have to execute a plan over time. And like I said, it's focused on the execution. And man, there's enough things to take your attention away from it. Um, that as you go forward, getting a simple plan that with risk management and being able to do the same thing over time can actually be boring. And boring can be really good.
all right. Pretty good conversation here. We got a minute left. Coach Paul, you got any words before we go into the weekend?
Um, First thing we got, get some rest. Um, Enjoy the weekend. Enjoy family and friends. Spend an hour when you have some alone time and you're feeling good to go over what you did the week before. Just review your trades. Don't beat yourself up or don't feel like, oh, next week I'm going to make twice as much. Whatever. Review it and see if you're executing, like Coach said, randomly or non randomly. Non randomly means executing a trading plan, whether you made money or not. And
Gotcha.
then you can move forward.
We
Have a great weekend.
VT asked a question earlier. VT, I want to get back to you. Said you're currently trading with gold. You were asking about gold stops, right? I'm just reading the conversation that you're having in the chat. You said you were trading with one mini with a 5 point stop. It's becoming difficult. We'll switch to micros. I think Genius Genie gave you a suggestion on how many micros to trade. Your last comment here, I want to just bring this to your attention. You said, "What is your daily profit target?" 3 and 4 micros is too little for profits. Please reframe that thought process, right? If you've been trading with one mini, and you've also mentioned in this chat to Coach Ray that you trade with 15 micros, which is 1.5 minis on an XFA with a $2,000 balance, I'm going to ask you, if 3 and 4 micros are too little to trade for profits, how much money are you consistently making trading the size you are currently? If it's not consistent, you have to reframe what you think is too little as far as profit goes. If it's too little as far as profit goes for VT 10 years from now when you're a $20 million trader, great. but where do you sit right now? And what building blocks do you have to put together in order to get to that point? It's not going to happen overnight, right? So reframe the way you think about it. Go back and watch some Top Step TV from 2023 when Dakota was building his live account balance. He did it copy trading a couple of accounts, trading micros, and ended up taking a $500,000 out in payouts. So please reframe that. Three micros in this gold trade, when we talked about it, micros to that low of that move, you're making pretty close to $1,000. A decent amount of money. Right? So just keep that in mind. And I'm really do mean that because you can get to the point where you're just like, oh, this is not enough money. I only made $600. I only made $500. If I gave you $500 right now, you would take it immediately, right? Not enough to get on the leaderboard, maybe, but you don't have to get on the leaderboard tomorrow. So please do reframe that. Right. Thanks, everyone. Have a great weekend. Today is Wine and Cheese Day, National Wine and Cheese Day. So if you want to go grab a bottle or not, do something fun, off the charts, review for a little bit for the weekend, and we'll get back to it on Sunday with the opening call with Anne Marie. Thank you all. As always, hit that like button if you haven't done so already. We appreciate you all joining. Coach Paul, you have a great weekend. Andrew, thank you for helping us run this class. I think Coach Hoop is doing his class in Discord coming up in about 15 minutes. We're out of here. Have a great one, and we'll talk to you
Peace.
all next week.